Nitin Bhasin, Head of Institutional Equities at Ambit, joining us this morning. Nitin, a very good morning to you. What do you think are the sort of trepidation or the concerns as far as tariffs go? All things considered, this is good news for any nation that is facing tariffs, including India.
Yeah. So, I've maintained for the last 1 year or so that the tariff imposition by the US government or Mr. Trump, is one of the most confusing moves. We'll keep on seeing new things every now and then. I think the trepidations are, now next what? I personally think that this is going to remain for a while. This is a tussle, and nobody can say that we are covered for a while. So we are as a house, we are not saying that this is the end of it. This will keep on increasing. I think this actually raises the concerns for Indian companies that they should actually go back and do inward looking on it. That this gives an opportunity for them to say, okay, let's look at better products. Let's look at better alliances. Go and form more global alliances with other countries or other partners. So it's a wake-up call for all of us in India that we can't just depend upon one country where it appears that, and that country is hell-bent on actually changing all commercial relationships with all countries in the world. So hence, I would say that the real trepidation should be we can't just look US. We'll have to build business models, alliances, and cost capabilities and product capabilities for different markets in the world and put our eggs in multiple baskets.
Nitin, one would say that's exactly the effort, right? With all the free trade agreements that India has gone ahead and signed. But this will take time to transition. The size of the US market makes it one that we cannot ignore or get away with or get away from, at least in the short term. For now, in terms of how equities are responding, is it the sense that the worst is over in terms of tariffs, or are we looking at a new leg of uncertainty?
I would belong in the latter camp that there will be more uncertainty, as if not. Then we got our US deal also signed. I was not very particularly impressed by despite what deal we got versus the deal what the Americans got over here. Perhaps we investing $500 billion or buying goods worth $500 billion from the US, and no major relief on the relative duty rates to the ASEAN countries. So I wouldn't say that it was a good sentimental thing, but I don't think so it was impacting our Indian economy that materially. I think what we need to think about is, can we actually build businesses where FDI comes in from all over the world, and perhaps we can offer people much faster clearances in putting up projects in India. I think beyond the FTA, there's much more that the government can do in terms of increasing the confidence of the global capital allocators, because global equity markets are going to go through a lot more change as bigger listings of AI companies happen, bigger defense companies in Europe and other parts of the world happen. I don't think so that the FPI will be short of opportunities to participate in other markets, either because of AI listings, defense listings, or manufacturing listings of large sizes in many other parts of the developed and near developed world.
Okay, Nitin, good morning. Hiral on this side. You're talking about the kind of impact we'll see overall. There is some bit of cautiousness, but from a strategy perspective, what are you asking investors to do? Because your outlook in terms of India was slightly negative when it comes to the corporate earnings growth. You found expensive valuations as well as an additional pressure. Where do you stand now? Because Q3 earnings somewhere have been better than what the street was estimating, specifically for broader markets as compared to large caps. Any interest that you see coming back, taking the way valuations have come off slightly? Yes, they're not, I wouldn't say they're cheap, but have come off slightly.
I think one of the things that in my last 1 week of trip in Europe, meeting global investors, it clearly is that people are still very cautious when it comes to India because the trends are not very certain. And just giving you an example of where the consumption trends came out from the recent earnings quarters also. Consumer durables, pretty much not holding up at all, whereas consumer discretionary doing very well when it comes to, let's say, luxury versus value doing much better. Going to hospitality or retail in the real estate luxury doing slightly much better than the value. So I think in trends in India, I don't think that we have a one common trend in consumption right now. There were pockets of some surprises of earnings. I think BFSI, especially in the small cap, held up really well. I think consumer discretionary held up really well. But our backward-looking numbers don't see that the earnings trajectory of this year's earnings has changed. We were at about 6-7% Nifty 50 growth. And I think today also we are at 6-7% Nifty 50 growth. In FY27, yes, the whole consensus expects it to grow at about 15%. But most of it, 50% of the incremental growth is supposed to come from banks. Even the consensus earnings suggest that it is banks what everybody is banking upon, or perhaps another 15% of the incremental growth coming from metals industry. So I'm yet not seeing very certain signs in the earnings estimates of the market participants or the recent earnings gone by for changing the trajectory of the earnings. So that's one. Number two, yes, we were cautious on the market last year, and we still remain that it's a very sideways market. It's a stock pickers market. Top 10 stocks will relatively do or lose less or do much better. All the companies more than about 3-4% of weight. We know that the IT stocks have taken a beating, and mid cap and small cap. Perhaps we are still about 6 to 9 months away. Some of my colleagues will say even more. But I would say we're at least about 6 to 9 months away. In the broader small cap valuations, perhaps they need more correction before we become very constructive over there. Without saying that, also saying that the small cap BFSI, whether it is MFIs, whether it is regional banks, they look to be a good space because A, the credit growth, their loan deposit ratios, and the credit costs cycle appear favorable for them.